Today we're talking about lithium. I'm sure many of you are familiar with the rapid uplift that we've seen in the share prices for many of the lithium stocks. And of course, over this past period, there's been a fascinating supply and demand dynamic playing out for the underlying lithium commodity price as well. But today I thought we'd pare it back. Let's talk about it at the core fundamentals. What's happening to lithium as a resource, and why is this driving many of the underlying share prices for the ASX Lithium stocks to go higher and higher? It's a fascinating discussion. There's a lot for us to unpack. As we go through, drop in a comment below and let us know your thoughts on the sector and which ASX Lithium stocks have caught your eye over this past period. So before we dive into many of these key factors that are contributing in to this rapid uplift that we've seen in the underlying lithium price, it makes sense for us just to take that step back and have a think about what are the key drivers. Now, of course, this doesn't apply only to lithium. We're using lithium as a bit of a case study, but really commodities at their core are predominantly a function between supply and demand. And of course, there is a qualitative component to that as well, with the sentiment that can drive short to medium term oscillations in share price as well. It's a fascinating dynamic, and lithium is one of these future-focused EV battery material commodities that has had a lot of attention over the past period. And of course, this has led to a rapid uplift in demand, a shortage in supply for a range of different reasons, which we'll talk about later in the video. And of course, some slowly shifting sentiment, particularly based on one significant announcement from Joe Biden over this past week that we'll explore at the end of the video, so stay tuned for that. And so the place that it makes most sense to begin with as we discuss the lithium sector and the different types of moving parts that are contributing in, it makes sense for us to begin with the lithium prices. As many of you are familiar with, the back end of 2017 and then the start of 18, there was a rapid uplift, a boom in the lithium prices that saw many of the lithium stocks move higher and higher to all-time highs. However, there was then a bust that followed in 18, 19 and 20 until we got that price signal at the back end of 2020. And now the lithium prices has continued soaring higher. LCE, depending on which benchmark you're looking at, has prices of above 70,000 USD a ton, which is absolutely mind-blowing to just consider where we were only 12 to 18 months ago. As we know, of course, stock prices often follow in a relatively correlated manner to the underlying commodity prices. Of course, there are a range of different inputs and contributing factors that lead to the aggregate share price. So it's not only the underlying commodity price, but the commodity prices are often a key driver or an insight into the sentiment surrounding a sector itself. And so we've seen a rapid uplift in the prices for lithium itself. As we know, there is a shortage of supply at the moment and demand has really started to kick up. And so as a result of that, it's a very fascinating place to be. And so then that leads us to some of those key contributing factors. As mentioned, we've distilled it down to 3 different factors about why there's so much excitement surrounding the lithium sector at the moment. The first 2 are fundamental, that supply and demand dynamic and how it's currently trading off. And the third one is that more qualitative look at sentiment and what's been slowly changing over time. As we do dive in, as you guys know, I'm just a bloke on the internet who loves talking about the markets. I'm obviously not a financial advisor and nothing we discuss is financial advice. Hopefully, however, it's an interesting starting spot for you to go away and do your own research from. And so starting on this demand side, as we know, electric vehicle demand is going to be a key driver for not only lithium, but many of these EV battery materials. And of course, EV demand has been growing and it's starting to really pick up pace. The electric vehicle transition is starting to grow along with this global decarbonisation trend. Of course, it has been growing over this past period, but we're starting to see this rapid uplift. What's fascinating, however, is yes, we're starting from a lower base and we're starting to get that uplift, but if we are eventually going to see above 50% and moving towards eventually over the next 30, 40, 50 years, 100% potentially EV penetration, we're still in the very early innings of this. And so as we can see here, less than 10% of total sales of global sales of vehicles were EVs, according to the International Energy Agency. There's a visual here on the right that gives a bit of an insight into the uplift in terms of EV penetration as a proportion of total global vehicle sales for passenger vehicles. You can see here on the right, just in 2020, so not that long ago, it was below 5%. But then in 2021, it's getting closer to that 10% mark. We're starting to get that exponential growth. And so it'll be interesting to see what 2022 and then beyond has in store for the uplift in terms of electric vehicle demand. As you know, more electric vehicles will drive demand for EV battery materials. Not all electric vehicle batteries are made the same. Lithium-ion batteries, of course, have different compositions, different makeups, use different resources and materials. But at their core, in their current form, with the majority of lithium-ion batteries that are used by many of the leading global OEMs, of course, lithium is one of those key resources that will be in demand moving forward for the foreseeable future at least. What's fascinating about electric vehicle demand is it's not evenly distributed. It's clustered around some key regions, with both Europe and China having over 10% penetration. Interestingly, the North American market and the US market is actually a lagging market, as is Australia. But over time, we're starting to see some investment from the OEMs and the global car manufacturers, and this has been coupled with regulatory and political support. And surrounding all of this is the supporting infrastructure that needs to arrive, because as we know, as infrastructure arrives, it makes it far easier to, of course, own an electric vehicle when there's more charging stations, when there's more support available. Consumers will be more enticed, or at least more incentivized, to potentially consider an electric vehicle. And as that happens, it's likely that we'll start to see this inflection point. And from that inflection point, of course, it's going to be very interesting to see how demand tracks and what the trajectory is from there. Depending on the forecast that you're looking at and the levels that you're currently tracking from, the electric vehicle market is forecast to have a 20+% CAGR over the next decade. Of course, when we think about the power of compounding and some of those numbers, that is a rapid uplift. And so I guess the underlying discussion on the demand side is that demand is here. It's still in the early stages, but according to many forecasts, it's likely to continue and if not accelerate moving forward in that foreseeable future. And then we move on to the supply side, because it's not only about demand, but as we've seen, particularly over the past 12 to 18 months, supply is a key component of this equation. And of course, supply chain bottlenecks, supply chain shortages, focuses on localization of supply chains, all of these factors contribute in. And so as we can see, demand is here, but supply can't come online immediately. And this is worth noting in regards of the backdrop that we also did have. We talked about the 17-18 boom for lithium, but then the bust happened. And what happens in the bust? As prices for the underlying commodity comes down, you of course get below that incentive price, which means that projects that may have been being considered, potentially were in the feasibility stage or the scoping stage, projects that might have been considered to potentially bring online, they're either delayed or cancelled, because unfortunately the economics just don't stack up to that. And so in 18, 19 and the better part of 2020, a lot of these projects were put into care and maintenance or were delayed. And so it's only really over this past period where we've started to get this price signal that we're starting to see a lot of projects into consideration. I'm sure many of you, if you're familiar with the EV battery materials space, you've started to see a lot of projects really going through that PFS, DFS stage, moving towards final investment decision and hoping to come online as quickly as possible to feed into these elevated prices and the uplift in demand that we're starting to see. Now, this is of course worth noting that there's a lot of gigafactories coming online. They can come online within 2 to 3 years on average, depending of course on the scale and what they're trying to develop. But integrated mining projects, depending on the types of projects, can take 5+ years. And so of course, as demand continues to grow, you're going to need resources to feed into that. And that's why we're starting to see prices continue to move higher and higher. Now, this is a visual from Benchmark Minerals. They're one of the leading forecasters in terms of the resources space. And they've got this visual here for the demand and supply forecast. As you can see here, demand is forecast to continue to rise and quite rapidly out to 2040. But of course, supply and even those that are potentially going to come online, it just can't rise up fast enough. There's a range of different forecasts, of course. So it's going to be interesting to see the trajectory of how this plays out. But this gives you a bit of a snap insight into how that could look. We know that not only over the longer term, but in the nearer term, projects are struggling to come online. We've seen supply chain bottlenecks, we've seen labour shortages, of course we've seen increases in wages over this past period that have affected some projects. We've seen those highlighted in quarterly and half-yearly results and earnings calls. But we've also seen some potential mining projects as well that have either been delayed, struggling to get permits, or there's been some discontent, I guess, from the locals in other areas. And so this is, of course, another halt or a bit of a roadblock for these developers and producers to navigate to bring projects online. There was an interesting note out from Macquarie over the past 12 months that stated they believe that potentially there could be a perpetual lithium deficit, which speaks to the scale of the demand and the difficulty to bring sufficient supply online. And I think that most people, of course, understand that it's unlikely that we're going to see these elevated lithium prices at these levels forever, but it's going to be fascinating to see roughly the range of where this long-term equilibrium price ends. I think that most people will acknowledge that it's likely that we're going to be leaving those prices from the 18, 19, 2020 periods behind, but where's it going to land? Nobody knows. We're seeing the DFS levels for pricing, of course, continue to rise higher and higher. We're seeing some interesting pricing mechanisms as well from some of the offtakes that are starting to be signed from some developers. So this is going to be a fascinating discussion, and I'd love to know your thoughts on it all too. So drop in a comment below letting us know. And I guess just building on that discussion surrounding supply, as we know, factories need resources. I guess this is quite intuitive and logical, not only for lithium, but for many of these EV battery materials. And we understand this, but it's also worth noting too, the current composition in terms of distribution of where a lot of these factories are in terms of the downstream processing and development, but also where a lot of the extraction and mining is happening. As we know that a lot of this development and processing at the moment is in China and centered around Asia. Europe is just starting to build out the supply chains there. Same with North America. But a lot of this supply can't come online fast enough. And so as we see this focus on localization of supply chains, on building out supply chain resilience, this is only going to accelerate the need for a lot of these projects to come online in a range of different nations around the world. And all of this is, of course, going to be accelerated and amplified by governmental support and regulation to support, incentivize, and subsidize some of this. And this leads us to the next point. And so before we discuss why sentiment has been soaring and unpacking some more of the macroeconomic picture surrounding this space, if you have enjoyed this video, don't forget to hit the like button. If you're new here, welcome. We make daily videos each and every day. So if you haven't yet, make sure you subscribe and turn your bell notifications on so you won't miss any of our daily episodes. If you've enjoyed it as well, please feel free to share it out. Sentiment surrounding the EV battery material space is soaring. And I think when we talk about sentiment, a lot of people intuitively just think about share prices. And yes, share prices can be an indication of sentiment, of course. But it's not only just in terms of share price and investment, but sentiment surrounding the EV battery material space, the electric vehicle transition as part of that broader decarbonisation trend. That's where sentiment's starting to change. And of course, that's more of a fundamental driver. As we discuss on the channel, share prices is a function of a range of different inputs, and nobody's able to predict what's going to happen on the short term in terms of share prices. But it's fascinating to see the sentiment surrounding the electric vehicle transition that's starting to really ramp up. We saw it with COP26 and the significant attention that that had last year. But we're also seeing it, for example, in a more near-term announcement with Joe Biden's critical minerals funding announcement. If you're wondering what that was and why that's so significant, we'll leave a link up above to a video that we did on that over the past couple of days that might give you an insight into why that's attracted a lot of attention for the sector. But we know that sentiment is not, of course, restricted to just one announcement. It's been a range of contributing factors in that have brought a lot more eyes into the story surrounding this sector. Underlying commodity prices push higher. We've covered that. The global decarbonisation focus is growing. And not only is it growing, but there's actually more incentive for producers to be able to utilise ESG-focused products that bring down their embodied energy because, of course, a lot of these are wanting to move towards net zero. And in fact, in some regions, we're actually seeing regulation coming in to encourage many of these producers to get their supply chains upstream towards net zero. We've seen an increase in government as well as corporate investment and support into the space, and this is likely to continue to grow moving forward. It has been interesting seeing the increased awareness around the EV battery material supply chain and the electric vehicle transition more broadly. Of course, as mentioned, it is still very early stage in terms of that global transition if we are going to reach those higher levels of penetration that have been forecasted. We'll continue to watch to see how it plays out. Let us know your thoughts. Drop in a comment below. A big thank you for joining us. And as you guys know, obviously, it's not financial advice. It's just a general discussion. But I do hope that it is an interesting starting spot for your own research. We'll leave links up above to some of the other videos that we've discussed in the space. But thank you for joining us. And for now, stay well and happy investing.